Stocks are struggling a little bit here as the Nasdaq's fallen. Not too much. We're talking like 30 bips, but there's a little bit of issue with Tesla the last 48 hours. Shares down again today. Got Tom White in studio. We got Matt Tuttle joining us on the line as the CEO and CIO at Tuttle Capital Management. Kind of a rough session for Tesla yesterday, Matt, and the big tech trade, of course, have been doing so well, but it's like once inflation came in the way bulls wanted, they suddenly want to buy some other stuff. Small caps, beaten down, hated companies. What do you make of the past week's action?
Yeah, so I mean, I think Powell has given investors the green light for the Santa Claus rally. I think you've got, an ungodly amount of actively managed money managers who are way behind whatever benchmark they use, and they're going to have to scramble to keep up. And, buying the Magnificent Seven now isn't going to do it. So you got to find other stuff coming off bottoms.
So where do you see the interest? Where are the flows coming in your guys' funds? What do people want to be a part of getting some of that year-end chase?
Yeah, I mean, right now we're seeing the most flows actually in our 2X long Tesla, TSLT. We'll see whether that changes. Now we're going on at least the second day of red. Elon made some news of the kind that I'm sure he does not like to make. I'm seeing some stories about, Tesla getting rid of Elon. I mean, I guess if the Patriots can get rid of Belichick, then who knows? But, Elon is Tesla. So, sitting here with the only 2X long and the only 2X short, on Tesla, I've got my popcorn ready either way.
I like that. Good analogy. So the Tesla TSLT 2X long, so you're getting some extra bang for the buck here. What's interesting is the chart for Tesla, is among the mega caps, not the most impressive still. It seems like it's been a pretty far distant second to Microsoft, NVIDIA, Alphabet, Meta. We're like still technically downtrending off those records in a way that pretty much all the other mega caps have gotten away from.
Yeah, no, if I were trading it, it would have triggered a short yesterday when it failed at the 50-day. Right now it's heading towards the 200-day, which would be a secondary short. I wouldn't even call it a distant second. I'd call it a distant seventh. If you look at the rest of the Magnificent Seven, I mean, Microsoft, Amazon, Google, those have all been beasts. And, Tesla, it started with the earnings, and, Elon is stepping on rakes at the moment.
Yeah, all right. We're going to talk some Microsoft. Hang tight, Matt. Tom, how do the options look in Tesla? Pretty pricey. How do you trade this right now?
Well, they're always pricey just because it's a high-priced stock. It's got a high beta, moves around quite a bit. But there's ways that you can take advantage of this. And maybe you think this stock's going to go down, but maybe not break through that 200-day moving average, or maybe kind of consolidate there after the 86, 87% rally that we've seen so far this year. Okay. So I looked at a strategy in here that's about a month in duration, going out to the December monthly cycle.
Bearish or not bullish?
Bearish.
Yeah,
but not ultra bearish, right? I did an unbalanced or broken wing butterfly here that lowers my input costs on a bearish trade, where you think maybe it's going to continue to grind lower. So going out to that December 15th monthly cycle, I'm going to buy one of the 230 strike puts, currently slightly in the money. Sell two of the 215 strike puts. That's where you want the stock to kind of grind down to. And then buy one of the 210 puts. You're paying roughly about a $4.50 debit for that. That's going to be your risk. $450 per spread, and it takes your break even to profitability down to $225.50 over the next 28 days. So you can see here from the risk profile, I'm offsetting some of the costs by doing a butterfly instead of just buying the outright put vertical here. But buying one of the 230s, selling two of the 215s, buying one of the 210s. You see that break even, $225.50. It's only a few bucks below the current share price, which is about $229 at this point. So this might be the way to play it, where you can offset some costs. You don't expect to go down to 200 bucks, but anything below that break even, because you made it a broken wing butterfly, is profitability on this one.
Okay. So downside, but not, deep collapse. Still looking for some pretty meaningful weakness here. Matt, do you have the Tesla double long, or do you also have the Tesla double short?
We also have the Tesla double short,
okay,
TSLZ,
right.
and and we've seen a lot of people trading the options on both of those.
Oh wow!
We got a chain going a week or so ago, and there's been a lot of activity. Lower stock price, and those retail degenerates love options on levers.
That's fun. Yeah, count me in. I guess I'm one of them. Microsoft, if we flip to a big winner here, how much of this is them trying to control their own chip supply chain like Apple and seemingly so many others now?
Yeah, I think that's a lot of it, but you've just seen so much money flow into these 7 names. They become a cash or a bond alternative, that's also skewing things. But Microsoft has been the strongest of the Magnificent Seven. So I got to figure that news is a good chunk of the outperformance. For my taste, it's extended here. I think the overall market needs to consolidate. So I wouldn't be buying it up here. I'd try to get it on a dip. But, the way things have been going, you could be waiting a while for one of those dips.
All right. Microsoft sure doesn't dip often. What do you see?
Doesn't like to.
No, it's amazing. Week 4 we're going on here for gains as we went through the 340 high. Options, Tom, are they getting a little cheaper with the stock just going one direction?
They were. They're ticking up a little bit as far as implied volatility, but this is another high-priced stock. So to Matt's point here, maybe he doesn't want to buy it here. What type of strategy works in that type of environment? If it does pull back, maybe you get that opportunity to buy it. And if it doesn't pull back at all, you get to keep some option premium that you sold. So I looked at a cash-secured put here in Microsoft, going out to that same December 15th, that monthly cycle that expires in 28 days. And I'm just going to sell an out-of-the-money put here. And I looked at the 365 strike put. You sell one of those, collecting roughly about a $4.70 credit. Now it's probably trading above $5, those puts. But if you collect $4.70 credit on this type of sale, you can see here from the risk profile, it takes your break even all the way down to just above $360. That's about 3% below the current share price in there. So this type of strategy works in 2 different ways, right? You either want to keep that option premium you're collecting on this one if it remains above that break even, or say it does slide below 365, Oliver, look where you get to buy the shares at a 3% discount to where the current share price is trading. You've got a month in this trade, so you've got some duration. And this is one of those strategies. If you're picking a price where you're comfortable buying shares, you can do this type of strategy on a repeated basis, whether it's by week or by month, where you can collect some option premium waiting for that stock to fall to levels that you want to purchase it. And if it doesn't, you just get to keep that option premium.
All right. Well, it's definitely a different approach here, for sure, but makes sense in a very different stock.
Yeah.
All right, so a couple options approaches. Or if you want to get the levered ETF, TSLT for the long and Z for the short from Matt Tuttle. Thanks, Matt.